Hello, everybody. It is Sunday. It is 12 o'clock Eastern, and Sunday at 12 o'clock Eastern is the second best place to be throughout the week. After Saturday at 8 p.m. Eastern on the Cash Flow Kings Live, the best place to be every Saturday night where we discuss what the people want to talk about. We don't glance over your questions. We go over everybody's comments, questions, and concerns. It's the best place to be on Saturday night. And on Saturday night and Sunday afternoon, you could be doing some pretty harmful activities to your, lifestyle if you're not
Yep.
on the Cash Flow Kings. Let's just say that.
Yeah, you could be waking bacon, or
Mm-hmm.
or you could cure your Saturday night hangover with a little bit of Cash Flow Kings while we do our weekly update.
Exactly. And everybody, if you're new here, the weekly update is basically where we share our buys, sells, and dividends for the week. Something that a lot of other finance channels really don't have the testosterone or balls to do. So, Fiscal, would you like to kick us off this week with some of your buys, sells, and
Sure.
transactions from
So,
abroad?
right. So actually, as it happens, I received no dividends this week because I don't do it for the
Ooh.
money, and also, I didn't do any buys or sells or anything like that, simply because I was out of the country and I could have, but there was nothing that needed doing, so I didn't do it.
Well, thankfully for you, Fiscal, I came with a clutch week this week for you. So we have
Busy
an
week.
actual busy week for me. To start off this week, I put $75 into Apple at $170.81. I'm really, really liking Apple around these prices. I will continue to add more if it falls into the 160s. If Warren and Berkshire were buying in the 150s 3 years ago, I believe that Apple's multiple is only gone up since then as they've grown their earnings. I believe it is long term at a fair price right now. And I think it's a solid time to add to an amazing business in Apple. Now, a lot of people in the dividend investing community do not love Apple stock because they don't pay a very great growing dividend, and the dividend yield isn't that high.
I heard if it's not at least 6%, you're wasting your time.
Indeed. Well, unfortunately, Apple doesn't have great growing dividend. Their payout ratio is still very low. My hope with Apple and their dividend is right now they're doing like a historical amount of buybacks. If you look at Apple's buybacks, it's absolute ridiculous when you look at it like it's historical. That's creating a lot of shareholder value. That's more stock of the company that I own with my shares. So I'm very happy about that. I believe that over a long-term time horizons, Apple slows down on the buybacks. They kind of cap that out. All that money is going to rather be going to research and development, which Apple's done very well with, I might say. But that's going to be going back in the form of dividends to us investors. And when they start hiking that dividend seriously, it will not be a force to be reckoned with. So I'm looking forward to that. Second this week, I bought 3 shares of Vici at $28.94. I got it below 29, so I think it's actually a really good price, and I'm happy I got it there. As you guys know, REITs and utility companies are being impacted a lot right now by higher interest rates. My opinion, if you're finding the right REITs and utilities to buy right now, it could be a really, really good time long term to be adding to them. So, stuff that's not in Vici's control, that's driving the stock price down, that's not really impacting their business too seriously, I am beyond happy to be able to buy more. Next, and this is the big one, I recently made a video on this and I talked a whole lot about on the Cash Flow Kings Live that we did. I sold out of my entire 3M position. I got $570 in cash, but it was a negative 38% loss for me. And I lost about $350 on the entire position. Now, where did I go wrong here? Well, I bought a lot of my 3M position in 2020 and 2021 when I primarily began, the dividend investing journey that I call it today, right? And at that time, 3M was this behemoth of a company. It was the darling of the dividend community. Somebody said in the
They
chat,
were all talking about it back then.
everybody loved 3M. 3M was the bitch, to be frank. It was what everybody would go to. You get your nice dividend. They were dividend king. They were paying for 60 plus years. Well, believe it or not, just because a company's been paying a dividend for 60 plus years does not mean that it's a good investment for somebody who was 18 years old. So unfortunately, I had 3 options in my 3M position. Would I buy it if I didn't already own it? That's the question I asked myself, and I said no, and that was a huge reason why I sold. But one, I would rather buy more, get my cost per share down. It would be much more of a value play, very contradictory to what my investing strategy is right now. Buying really good companies at fair prices, long term, and holding on for a long time. That's my strategy to sum it up. 2, I would continue holding. It would probably sandbag my portfolio, but maybe I can get out even. 3, sell off, look in the rear view mirror, learn my lesson, do some compounding. So that's my current plan with 3M. I'm sorry. Thank you for your service, but learn my lesson. Another thing with 3M, it was a giant business. There's so many moving parts that saying that you're never 10 feet away from a 3M product is true. There's probably something from there, right? But, 3M, in my opinion, is one of those businesses that you might want to avoid because of how big it is. United Health is another example. So many moving parts, so many things that can go right, so many diversification, but so many things that can also go wrong in the business. And that's something that I
Yeah.
think I also learned from 3M.
Yeah. And sayings like that, I mean, yeah, you're never 10 feet, more than 10 feet away from a 3M product. So they sell a lot of different products, and that
Ooh,
can be, that could definitely be a positive. I'm glad they sell a lot of things. Like, that's nice. But I think that's like the same rationale that tells somebody like, oh, hey, if a place is super busy, it means it's a good investment. Like,
yeah.
oh, the place is always crowded, I should buy it. It's like, well, hold on a second. They're like, let's take a look at the financials first.
Only if it's Target or Starbucks. All right. And you may be wondering, with that $570 in cash, what am I planning to do with it? I can do a lot of things with that cash. $570. I can get like 3 Starbucks orders with that. I can do a lot with it. I could go to Vegas, get some cocaine. You could do a lot of things.
You could
I'm
probably
just
play
saying,
Powerball.
yeah, you could definitely. You can
The
go to
Mega Millions
casino.
is like 700 million right now, man.
You could you could pay off a lot of debt with that. But with that money, I haven't fully blown it all on stocks. I'm trying to be a little patient because I still think a lot of stuff's overvalued. And if we were to go into you see very fast how sentiment on stocks can change this week with a lot of stocks going on decline. I want to be a little more prepared for that. So I am keeping some of that cash, but I spent $100. I put it in a Costco. Costco was down about 8% the other day because of their earnings. Analysts didn't like that they didn't increase their membership price or whatever. I think that's stupid. Charlie Munger always says that Costco, if you're, holding it for 40, 50, 60 years, it's a really good it's a really good investment to own, point blank period. I will admit it's probably not the greatest price to be buying it, but I think I'm buying an amazing business regardless, and can't time the bottom with Costco. I learned that when I first bought at 535 in May, and it's at 730 now. So that's lesson learned there. And then I put $200 more into Vici at $29.29. I'm really looking forward to that Vici dividend fiscal next quarter.
Yep, definitely.
It's going to be a lot. You guys might get subscribe for it and turn on post notifications. But earnings, from first glance, earnings season is kind of slowing down. It's not fun. But, there are some companies that you may want to keep an eye on this week. For me, what I see right now, Clover, Dollar Tree, I think that could be related back to Target. Dick's Sporting Goods, I mean, that's
Archer
interesting.
Daniels Midland
Oh,
on Tuesday. They
Ulta,
had
Ulta Beauty.
they had that accounting fiasco recently that dropped
Oh,
their share price. A lot of people bought because it's a company that's high quality, been around a long time, and you usually don't get a big discount like that on something like that. But people might still be skeptical of their numbers and things. Might be some fireworks on that one.
could be. Yeah, I mean, kind of unfortunately, earnings are slowing down, so gonna be interesting to see. But nothing crazy popping out for me this week. But the place that is popping out every Saturday, 8 p.m. Eastern, the Cash Flow Kings live show. Best place to be. Check out the Do Dividend Stocks Hot Drugs merchandise. Makes you look very big and also gives you immunity to illness at times.
It shields you.
Yep. All right. Thank you all for watching. Make sure to tune in for next week's weekly live. Smash the like button, subscribe, do dividend stocks at drugs, and of course, remember cash flow is king.